And shifting focus to Wall Street now, U.S. stocks started August on a downbeat note, plunging sharply lower following the release of new economic data on Thursday. The data was driven by concerns that the economy might be slowing more rapidly than expected, while the Federal Reserve continues to reinforce a restrictive monetary policy. Take a look.
Wall Street's main indexes kicked off August with a nosedive after economic data released Thursday reignited fears that a recession could still be on the horizon. The Dow shed 1.2%, the S&P 500 lost nearly 1.4%, and the Nasdaq plunged 2.3%. Stocks initially opened higher, buoyed in part by Meta platforms after the Facebook parent issued an upbeat outlook for the third quarter. Shares gained nearly 5%. But stocks headed south after data showed a measure of manufacturing activity from the Institute for Supply Management dropped to an 8-month low in July, signifying contraction. And the number of Americans filing new applications for unemployment benefits last week increased to an 11-month high. Those signs of further economic weakness prompted Eric Ditton, president and managing director of the Wealth Alliance, to wonder whether the Federal Reserve should have cut interest rates at the end of its policy meeting this week.
I would say to Jay Powell, careful what you wish for, my friend. You were fighting for the 2% inflation. Well, to get to 2%, there's collateral damage. And collateral damage is a slowing of the economy. Now, he wants that soft landing. Soft landing means we slow the economy down, we bring down inflation, but we don't go into recession. But we have had an inverted yield curve now over 500 trading days, one of the longest ever. That often is a precursor to a recession. Not a guarantee, but it's one of those signals. So market's starting to get a little nervous, and there was certainly an opportunity for profit taking.
Investors will eye the non-farm payrolls report on Friday for any signs of further labor market weakness. Stocks on the move included Amazon, down 1.5% at the close, but it dropped another 4.5% in after-hours trading after the company forecast current quarter sales below estimates. Shares of Apple, which also ended about 1.5% lower, rose after the closing bell when the iPhone maker reported stronger than expected revenue. Chip stocks sold off, sparked by ARM Holdings' conservative revenue forecast and Qualcomm flagging a revenue hit from the impact of trade restrictions. ARM shares plummeted more than 15.5%, while Qualcomm stumbled more than 9%. And NVIDIA tumbled more than 6.5%. The Philadelphia Semiconductor Index lost more than 7% as a result, its biggest daily percentage drop since March of 2020.